Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, July 29, 2015. And you're looking at a daily chart of the SPY, and we had another up day, which is expected, right? We're going to get maybe one more up day. I'm really eyeing the 211.45 number. Maybe we get up to 212. That's a little suspect, but I think we can push up to 211.45, and that's where I'm going to start looking to put on some more short plays. I was going to unload a lot of the equity positions today, and I just decided I'm going to wait one more day. It may or may not work out to be the right move, but that's what my decision was, and therefore I'm going with it, just to let you know. And but I do think there may be a little more upside coming. We'll see. We could even go up, maybe tomorrow, maybe Friday's like a mundane day, but I'm pretty sure that the market's going to turn down next week. Now remember, I do have a turn date tomorrow, and it's always plus or minus 1 day, so it's obviously plus 1 day because today was the minus. So tomorrow or Friday, the market should stall out, in my opinion, and then we're going to turn back down. Now, for those of you who understand or have ever learned or paid attention to Elliott wave analysis, I don't particularly love it. In fact, I don't like it at all because there's always at least a dozen or 24 interpretations of the same chart, and I don't use it. But what I just want to point out is, let's just say for argument's sake that this was an ending wave up here at the 213.18. Well, what I think is probably happening in Elliott wave terms is this would be a wave 1 down. Here, let me draw it in. I like the drawing tool. This would be a wave 1 down. This is potentially a wave 2 up, a retrace, and then we get a third wave down, which would be the stronger wave. And that's kind of what I'm anticipating. I'm not saying it's an Elliott wave analysis at all. I'm just suggesting, I was just thinking about it today, and it just looks to me like this is a counter trend rally. You know, markets don't generally go down this much and up this much all within a week and a half. That's not normal market behavior. This is not a normal market. When markets behave erratic, it's generally a precursor of something bigger to come. Could the bigger thing come to be, could the bigger thing coming be new highs? It certainly could. I don't believe that's the case, and if we do make new highs, I'll say I'm wrong, and we'll reevaluate, and then we'll have a whole new set of circumstances, and that's okay too. But I don't believe that to be the case, and that's why it's important to know where we're wrong. So for example, let's say we get up here, and I start buying short positions in the market or selling the market short and all that stuff, and then all of a sudden we make new highs. Well, I'm only wrong by a little bit. And therefore, if we close above 213.18, then I'll know I'm wrong, and you lick your chops and you move on. And that's why the amateur traders generally will start shorting down in this territory, and that's where this short covering comes in. They start shorting because the media gets all bearish on them, and they listen to the media and they say, oh no, the market's going down, and then a day later we're up here and the media is talking about new highs again. That's exactly what happened. That happens each and every time. It happened down here. It happened again here. And that's why I just think that you have to be aware of what the real circumstances are in the market and not pay attention to the talking heads in the media. They're just generally wrong somewhere in the neighborhood of 100% of the time. So what we have, and by the way, let me show you an intraday analysis here for a second, because I think it's interesting to say the least. Oh, I've got the after hours session going here. Okay, so on a 60-minute chart, you can see how we rallied up into the 209.72. This was yesterday. We stalled out, got above it, consolidated below the 210.54, right, in this area here, tested it, failed, and then broke above it. Now let me show you even on a shorter time frame how important these levels are, okay? Yesterday we rallied up, we missed the, oh no, this is today. We rallied up to the 209.72, okay, we consolidated below it, and when that happens, okay, when we do that, right, when we consolidate below an important level, that level becomes less and less important because the market is telling you it's preparing to go higher. It's building momentum to go higher, which is exactly what happened here. Then we rally up. We come up short of the 210.54. We came up to the 210.50, which is normal behavior. 210.50 is kind of one of those round numbers, okay? And then we kind of failed. Looked like the market wanted to go lower. We built a bearish pattern here on the 10-minute chart. We did go lower. We kind of tested, not to the number, but we tested the 209.72 again. And then the Fed came out with their announcement. We spiked up above the 210.54. We went back down. And then we rallied up to the 210.54, beat on that for a couple of hours. And then what happened? Because we beat on it for a couple of hours below it, it became less and less important. And then what happened? We beat on it, and then we broke above it, and now we're consolidating again, maybe to move higher. See how this is called a test candle. We came down and tested it one time after the Fed announcement this afternoon, and then we rallied back above it, and now this is a bullish pattern, maybe for higher prices one more time, and that's where I'm getting the idea. Let me go back to the daily chart. That's where I'm getting the idea that this level here at 211.45 is going to be important, and I think tomorrow we have a chance to get there, and if we do, I think that's the number. We could get up to 212, but it's not a technical reason why. Well, actually it is. The 211.45 is certainly a technical number why, but the reason why I think that's going to be the stall out point rather than 212 or 213 is more of a gut feeling. So I'm just suggesting, just from experience, that I think that's going to be the number. We'll see how it works out, but really, folks, regardless of whether it's 211.45 or 212, who cares? If we go back down, okay, whether it's from this level or this level, what difference does it make? If we do this, whether it's from here or here, and I'm right, and we do this, it doesn't make any difference whether I'm right or wrong by 50 cents. Who cares? It doesn't make any difference in the long run. I'm just trying to give you the most accurate reading that I can give you, and that's what I'm here for. And then I'm just giving you what's on my mind. So I'm giving you both the technical stuff, the numbers that do work out to be right most of the time, and then I give you really my gut feeling and my intuition, my market experience as a secondary factor of what I'm seeing. And that's really it. So we had, and let me give you a couple of other things. Let's look at the IWM, okay? The IWM, what happened? We got above the head and shoulders neckline, so that's actually bullish behavior. I'm not saying we can't turn back down, and I'm not saying this is a failed pattern and it's going to go all the way up to new highs or anything like that. I'm just saying that this technically this pattern is really off the table. It's not necessarily meaningful in one way or another, but the IWM, Small Business Across America, was somewhat less important today, or I'm sorry, less bullish today than the SPY. The SPY was up about 2/3% today, and the IWM was up 18 basis points, 22%. It was up less than 0.2%. So that's showing you market weakness. Let's look at the intraday behavior. Okay, you see this? Okay, here's the intraday. This is all we can muster. We couldn't even get up to the 50-period moving average. And to me, that's just another sign of, in my mind, weakness. And then if you look at the VIX today, the VIX came down a little bit, which is fine. I'm looking for the VIX to maybe get back down to that 11 print again. We're at 1250. We got down to, what was the low today? 1221. I'd like to see it get down to 1150, at least below 12. I think that would be a good print. Do we get to these lows here? I don't know. I don't think so. We may, if we have one more strong up day in the market, we'll get down to this level, but I don't think that's going to happen. And that's not a technical reason. That's more of a gut feeling more than anything else. So, there's my take. Let's look at the transports, right? Let's look at the daily chart of the transports. And let's see what happened here. Okay. and we got above that downsloping trend line, which I didn't think we would. So what's the next area of resistance that we're going to find? Well, it's right here, okay? So right about 8,500, 85 and a quarter, in that neighborhood. That's going to be the next area of resistance. There's a ton of resistance in this area. Do we get up to that level? We could with one more positive, sharp up day in the market. And remember, tomorrow being the turn day, okay, we can rally up into tomorrow and through tomorrow, and that's completely normal market behavior. Look, here's the deal, okay? The market never, ever, ever makes it easy. It's not going to ring the bell at the top. It's not going to ring the bell at the bottom. We have to use all the indicators that we have. We have to use all the market behavior, all the stuff that I tell you on a daily basis to kind of put the pieces to the puzzle together to give us the indication. Maybe the market doesn't turn down till Monday or Tuesday. That's completely possible. I can't tell you that definitively the market's going to rally up tomorrow to this number and turn down. It just doesn't work like that. I wish it did. Sometimes I give you numbers, and sometimes they work out to the T, and sometimes they don't. That's just the market. That's just the way the market is. But I give you everything I know, everything I'm seeing, and then we put the pieces to the puzzle together, and we do the best we can. But what I can tell you is, and I'm just going to go back to the spider one more time, what I can tell you is that cyclically, from a cycle perspective, this should be the top. Now, where do we know we're wrong? If we close above this level, I know I'm wrong, and then we have to reevaluate. That's just the way it is. Do I think the market's going to close above that level today? No, I don't think that's the case. Tomorrow, what happens if we rally up 25 S&P handles? I'm going to have to change my opinion, most likely. But this is the way the market is. This is how it works. This is why we're not loading up on short positions yet. This is why I haven't put out another short trade yet. And by the way, interestingly enough, and I think this is extremely interesting information, the BIS, which we still have, or some of us still have, it was up today 2.5% because the IBB was down. So turns out that that's a good trade so far. Even though it pulled back nicely yesterday, it still turns out that it was a positive trade. So even though the market's going higher, the one short position we have so far went higher today in the face of a higher market. So that's positive. Okay, let's go over to gold. Here's a technical term for you. Gold didn't do squat today. So let's look at the intraday, okay? And you see this spike higher? This was only the Fed announcement. And it's like an earnings announcement. They go off the table when the Fed has their announcement. For that half hour, 20 minutes, 15 minutes, whatever it is, all the markets whip around. They get disconnected from reality for, half an hour or less. And then they come back to reality. And what happened? Nothing. So here's what I did. I put in another area which is basically 1089, and we have now a channel that we're trading inside of, and we're right in the middle of that channel. So we have 1105 on the upside, we have 1089 on the downside, and here's the deal. Until and unless we close above this level or below this level, there's nothing to do. And we're going to let the market tell us which way it's going to go. And I'm pretty confident that if we close hourly and then daily below 1089, then the market's going to head lower one more time. And then back to the numbers I gave you last night and beyond last night, which is, 1068 and then 1048. And those are the numbers. And then on the upside, 1105, I think that we have a pretty heavy rush up to the 1130 area, and if that happens, I think there's even higher prices than that. But there's nothing to do yet. We have to wait for the market to get out of this channel, and that's just basically the bottom line. Look at this. All this time, okay, which is several days. Let's go back to the daily chart, okay. We're in this channel since we made this low, so we're basically, other than this low, we've really been in this channel for all this time. and we haven't broke out of it definitively one way or the other. This all happened within like a few minutes, and then this happened in a couple of minutes. So other than a few minutes here and there, we've been in this channel for 1, 2, 3, 4, 5, 6, 7. So we've been in this channel for 7 trading days. Chances are we're going to break out of it sooner than later, but until and unless we do, there's nothing to do. Okay? Let's go to the oil market. All right? Now, oil is also interesting because let's go back to what we discussed last night. If you remember last night, I did exactly this. Okay? I said, this is, whoops, wrong tool. I always use the wrong tool. My apologies. And now I can't get it off the chart. All right, here we go. Sorry about that, folks. You just have to bear with me. I use the wrong tools sometimes. Remember I did this? I said this is bullish behavior. What does that mean? Normally, higher prices. Now, what happened? It was the Fed not the Fed announcement. It was oil inventories came out. Let me get rid of this for a second. Oil inventories come out at 10:30 in the morning. Okay, 10 o'clock. Well, let me go back. Let me go to something different. Watch this. 10-minute chart. All right. What time is this? 10:40. So 10:30, the oil inventories come out, and immediately the oil market spikes up. Now the question is, did the oil market spike up because of the oil inventory numbers, or did the market spike up, and I'm just going to do this one more time, and I'm laughing because I think it's funny, or did it spike up because this was a bullish pattern? I don't know. You decide. I have my opinion. Everybody has their opinions, and that's just where I'm going to leave it. So here's the other thing. This is also still in a bullish pattern, so I think oil's going to take a run. This is my opinion, not based on technicals, not based on numbers that I have for you, but I think that oil goes to $50. And if oil goes to $50 tomorrow, I think it's a stone cold short. That's my opinion. Now here, if you want to play oil, here's what you do, okay? What you do is you take the $50 number, if we get to $50, and you can short it at $50 tomorrow, and you have a tight stop. Give it 50 cents. That hourly close above 50.50, something like that. And again, this isn't a technical number. This is not a number I've worked out. This is nothing other than how I would trade it, and I probably will. If oil gets to $50 and fails, it's really got to fail. It has to get to 50 and begin to fail. You got to see some kind of a topping signal, and you can use the 10-minute chart for a topping signal. You're looking for a doji. You're looking for an engulfing candle. You're looking for a failure at 50. You're looking for the market telling you it just can't do it. It can't get above 50. And if that happens, okay, and so you don't have to get in at 50. You can get into 49.50, 49.75, 49.25. I just think 50 is a stone cold short tomorrow if we get there. And I'm saying tomorrow because it's a turn day, and it's not just a turn day in the stock market. So take that for what it's worth. It's not a bona fide trade. I'm not putting it out to all the members saying short oil at 50. I'm saying if you're a trader and you're in the markets on during the day, intraday, and you're watching, you have to pay attention intraday. Don't short the market at 50. Go about your business and find out you were wrong at 4 o'clock, okay? Or when the oil market closes at 2:30. Don't do that. You have to be watching it. It's got to be a failure at 50, but that's what I think is going to happen. So I'm going to leave this line in. I'm going to save it, and we're going to see what happened tomorrow, okay? And we'll just see what happens. So I just think that oil just, in my mind, it wants to get to 50, and I think 50 is a stone cold short. That's an opinion. It's not a technical reason why. It's, again, from experience. It's from the fact that I think tomorrow is also a turn day in the price of crude oil, not just the stock market. Take it for what it's worth. Okay, let's go to the bond market. We'll go to the TLT, and what happened here? Let's go to the daily chart. It's easier to see it. And what happened? Another down day. So I said we were going to see more downward pressure in the market. We're seeing more downward pressure in the market. I still think there's more downside. I just don't know how much. I'm suspect that we're probably going to see higher prices in the bond market coming when we see a turn down in the stock market the next time, whether that's tomorrow, Friday, Monday, whatever it's going to be. I think that's when it's going to coincide with a move higher in the bond market. But I suspect we're going to see lower prices first. So I really need to see a pattern develop. I need to see the market give me a reversal signal. Right now, it's just doing what I expected it to do. It's working off some of the overbought condition, right? We were long from here. We went up. Okay, now we're just working off some of the overbought condition, and then we may see this. And guess what? What is this? ABC. Haven't used that in a while with you. This is an ABC pattern potentially, and that's completely normal market behavior. So where does this end? Well, let's see for a second. I haven't even done this, so we're going to do this together. If you look at a Fibonacci retracement from the low here, okay, and if this is a pivot top, okay, I can't seem to get it exactly right, but this is close enough. So we came into a 25% retracement. Some people use the other normal Fibonacci numbers, 238, I think it is. I don't use that number at all. I use a quarter. I like quarter. I like 50. I like 75, 100. And I just find that the market tends to work better that way. And you can see here we came down into what the 120.52 was really a 25% retracement. And what was the low today? 120.42. And that's the number we reacted off of, and then we moved higher. So a 382 would be about 119.60, call it 119.50, 60. It kind of works like that. It doesn't always go to the number. It kind of pierces through or comes up short sometimes. But if we came into, and I don't know that we're going to get there, 119.60, and that coincides with a market turn, I would think that would be your zigzag. I would think that's going to be your ABC right here. It would be completely normal market behavior, okay? So that's what we're going to use for the bond market. It's just doing what we said it was going to do. That's all. Natural gas, doing what we said it's going to do. Moved higher one more time. So remember I said that you could have a stop in at yesterday's low. Now you could have a stop in at today's low and just ride it higher. I'm not sure how much more we're going to get out of it. I think, and the reason why I think that is I'm suspect the dollar, and we'll get there when we get there. So I was saying that this was a bullish pattern, right? We had a bullish pattern, and we're moving higher. I just don't know how much higher we're going to move. I had always had $3 in my mind. I've told you $3 a number of times. I had this line up here, which is short of $3, but we hit it once, we backed off. And whether we can hit it again is going to be suspect. So if you're long the natural gas, and I know some of you are, just trail your stop. Make sure you keep moving it higher and have today's low as your stop. And you should be well within the money by now. And that's what you're going to use as a stop. So now let's go over to the dollar and see what we have there. So we never got to the 96.15, and I don't know that we're going to get there. Because we had a pretty good spike higher today, and it was also kind of coinciding with the Fed. Look what happened. The Fed announcement here. Let's look at what time it was. Okay, what time was it? 14:10. Fed comes out at 1400, which is 2 o'clock. So here's 2 o'clock, and then we have 2:10. We spike down, and we spike up. And, there's just no way to tell what's going to happen around the Fed announcement. I thought when we started to go lower, I thought we were going to finally hit the number. And now I'm not sure. I think I'm suspect that we're going to continue to see higher prices in the dollar. I just don't know. It's a market. I just can't tell you. I'm going to have to do some more work on it. I need the market to tell me what it's going to do. And at this point in time, until and unless we get above this high here from 97.41, I'm just going to leave it alone. And if we close above 97.41, I'm going to call that bullish behavior. And from a daily chart perspective, I'm going to say that this was a pullback and an A, B, C zigzag market rally, and that's what I'm going to call it. So I'm going to leave it alone for now, and I'm just going to let the market show me more. I have to play it like that because with these Fed announcements. It's kind of like earnings. You just leave it alone for a while. And speaking of earnings, let's take a look at something. I want to take a look at something with you and show you something. Okay? Now, Facebook. Okay? Facebook comes out. All right, now let's go to the intraday, and we'll go to the 24-hour chart. Here's the 10-minute chart. Now let's go to the 24-hour. Look what happened. Facebook comes out with earnings. They supposedly, the analyst expectation thing, they beat on the top line revenue. They beat on the earnings number. They beat on this. They beat on that. And simultaneously, the stock's going down, and then it reverses. So what happens is, and I wasn't watching the media, I was actually preparing for the video. But you can bet your bottom dollar the media was scratching their heads, the talking heads. They were thinking, well, maybe some analysts were expecting higher numbers and all this stuff. And then as the stock begins to reverse, okay, then they start saying, well, the forward-looking statements are good. We're digging into the numbers, all that stuff. It's all nonsense. This happens the second the number comes out. Nobody knows what the whole report says at that time. This is just a function of money flow. It's a function of the fact that really the market complexity has changed, and when earnings happen, anything goes. It's just a wild card. It's like playing craps. You have no idea what numbers are going to come up on the dice. Google goes up $100. Apple goes down. Amazon goes up a huge number, then backs off. Facebook goes down. Now it's trying to come back up. You just have no idea. And that's why I say, if you're a long-term investor and you're holding stocks into earnings because that's what you do, that's fine. I don't hold stocks into earnings unless I'm holding something for a longer time frame because I'm holding something into a longer-term market cycle. But there's no way I buy a stock and guess which way earnings are going to go, or sell a stock short and guess which way it's going to go. You're going to be wrong. The times you're wrong for so much. I mean, if you bought Google, if you shorted Google hoping that it was going to go down and you're wrong by $100, I mean, that's ridiculous. And so, this is just the function of earnings. Who knows whether this turns down or not? I mean, I'll just do this with you. Watch this. I'm doing this for the first time, right? Because I didn't do this before the video. Here's a high and then a low, and now we retraced more than the 618. We'll see what happens at the 7.5 retrace. If we blow through it, then it's probably going to go higher tomorrow. If this fails here between this number and fails, you're probably going to go back down. We'll just see what happens tomorrow. I'm just doing that for fun. Anyway, back to the markets. There's really nothing else to talk about. So with that, I'm going to leave it there tonight. I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.